I believe Microsoft is the best information technology company to buy right now. Let's jump into the analysis. If we break up their revenue into different segments, we can see where their revenue primarily comes from. Productivity and business processes is sitting at $33.1 billion. This is their biggest revenue source, and this would be Microsoft 365, LinkedIn, and dynamic products and cloud services, including Dynamics 365. These are all intangible assets, which is a very strong feature for Microsoft because most of this revenue is coming from a subscription basis. So they're making a monthly revenue on all of these different services that they offer. Their next one is the intelligent cloud. This is sitting at $29.9 billion. This would be Azure and other cloud services. This saw a 26% year-over-year growth. And their lowest one, more personal computing, sitting at $13.5 billion. This would be Windows, OEM and devices, Xbox content and services, and search and advertising. In terms of Microsoft's financials, they're a pretty strong company. The only concerning thing is their debt is significantly higher than their free cash flow and cash equivalents. But if we take a look at their statements on an annual basis, they're actually really strong. We can see that total revenue is sitting at $281.72, gross profit $193, and net income $101.83 billion. If we take a look at the balance sheet, their assets are growing, so are their total liabilities, but that's expected as companies do grow. Like I always say, and total debt is growing. Net debt is actually decreasing, which is a positive thing. The most important one is their cash flow. They actually saw a decrease in cash flow from 2024 to 2025. They were investing more money into the company, so that extra cash left over, they weren't able to have as much as they did in 2024. So that's not always a good thing, but that could actually help make them a little bit more undervalued in terms of the discounted cash flow statement. Their dividend yield right now is at 0.64%, which isn't too strong, but they pay out a pretty considerable dividend. Dividends per share in 2025 totaled at $3.32. Dividends per share in 2024 totaled at $3. So they're increasing it. We can see from 2019 to 2025, they've increased it significantly. I think they'll continue to do that. They're also repurchasing shares as well as paying back the shareholders. So they do favor you in that. You can see that dividend yield's just decreased with the AI boom in stocks and the increase that Microsoft saw over the last 5 years or 10 years, their dividend yield is going to decrease. Now, Microsoft seems pretty overvalued when looking at the valuation ratios, but if you compare them to their peers, they're actually quite undervalued. We can see that their price to earnings trailing 12 months was undervalued compared to these companies. Their price to book is undervalued. The most undervalued actually out of all of these companies. And price to sales is pretty undervalued compared to these companies. They're sitting pretty close to Oracle, but regardless of that, they are actually quite undervalued compared to their peers. So you have an advantage in Microsoft in terms of valuation compared to these 5 other companies. Over the past 3 months, Microsoft has actually been declining. This is due to the CEO selling a large portion of his holdings. This article states the sale involved 149,000 share splits across several tranches, with weighted average prices ranging from $503 to $507. But even after these moves, Nadella continues to hold a significant personal stake. Based on Microsoft's September 4th closing price of $507.97, its direct holdings remain valued at a roughly $401.7 million. So a large amount. Yeah, so I don't think Microsoft's decline is done quite yet. I think there's still more shares to be sold from the CEO. But this gives you quite the buying opportunity. We can see over the past week, it actually bounced off of that 200-day moving average and has been bullish. I think we're going to continue to see a pullback. Maybe a bounce off of that 100-day again. But I think, another continued pullback. What this means is that each time the stock continues to decrease is a good buying opportunity for you, and the stock becomes more undervalued. So that's always a positive thing in terms of valuation. Right now, like I've showed, a lot of these AI and technology companies are insanely overvalued, and Microsoft's really not that bad when we look at their price to earnings, their price to sales, their price to book, and some of the other valuation ratios. Yeah, the Mag 7 companies have such a huge holding in the market right now, and I think they will continue to go up over the next 5 years. So I think this discounted price right now for Microsoft is a huge gain for any investor. I'm going to wait for a little bit more of a pullback, and I definitely think one's coming. The CEO still needs to sell more of his shares. Not a bad entry level is that 200-day moving average. If it continues to go down, that's even better. With such a strong company like Microsoft, it's going to bounce back. In the short term, it looks very desperate. The stock price is done. It's not. Fundamentally, they're so strong. You're getting this at a undervalued price compared to other companies and their peers, and you're getting it at a discount. This is all just for educational purposes. This is no investment advice, but I personally think that Microsoft's a good buying opportunity. As it continues to decrease, you're getting it at a discount, and the stock price is eventually going to go up. So I hope you guys enjoyed this episode. Make sure to drop a comment, subscribe, and like, and I'll see you in the next episode.